Oftentimes, a company will purchase both the land and a building for one purchase price. And then the problem that occurs is that we have to determine what part of that purchase price would go towards the land and what part of the purchase price would go towards the building. And the land doesn't depreciate, but the building will. So if we use this example where we purchase land and building for $2.8 million. And we had an appraiser come in, or you can get this off the property assessment, and they told us that the land was worth $300,000. So this is the fair market value, and that the building was worth $2.7 million. Okay, but the problem is when we add that up together, that means it's worth $3 million, but we only paid $2.8 million for it. So I can just prorate between the fair market value of the land and the building, and then use that percentage to estimate the cost. So this is how we'll prorate it. So I'll record the land and the building, and FMV just means fair market value, and I'll just take this land, and I'll take this building. So that total is $3 million, and that's the fair market value. So if I take $300,000 and divide that by $3 million, that gives me 10%. And if I take $2.7 million and divide that by $3 million, that gives me 90%. So this has to equal to 100%. So now I pay $2.8 million in total. So this value right here. So if I take 2.8 million and multiply it by 10%, that gives me 280,000. And then if I take the 2.8 million and multiply that by the 90%, that gives me 2520. So then this amount here is what we will journalize on our books. So when I go ahead and make my journal entry, and let's just pretend we had just, $2.8 million sitting in our bank account, we would debit land for what we paid for it, the 2.8. But I'm going to prorate that and just say that the land is about 280,000. And then we're going to debit the building for the 2.52. So in total, that still comes out to 2.8 million, which is how much we paid. And we'll just assume that we paid cash.